Yeah, I love that question, Albert. I would argue from any investment perspective, but especially from a responsible investing lens, and think about, the dialogue around climate right now, especially, right? We were speaking earlier about, some of
Mhm.
the results that are coming out with some research, but, you cannot invest with a very short time frame, I believe, in today's day and age, recognizing that the world is greater than we are, right? Our investments have lasting impact on not simply somebody's investment portfolio and the financial results, but every single investment has some type of impact. It could be positive or it could be negative.
Mhm. Hi, everyone. This is Albert Vázquez Agustí. You are listening to the second episode of the Towards 3Z podcast, where we talk about digitally transforming the world we build towards zero emissions, zero downtime, and zero waste. In summary, a resilient world. I'm joined today by Megan Fielding. She's Senior Director for Responsible Investing at Nuveen. Nuveen is a US asset manager with 3,000 employees, and the firm manages 1.2 trillion assets among mutual funds, closed-end funds, private equity, hedge funds, and real estate. So, in other words, they cover investments in public markets and private. Megan, I'm delighted to have you on the show. Nuveen is a reference in the institutional investment world. The firm has been managing assets in the last 120 years and is recognized as one of the first in the industry to practice responsible investing. Megan, responsible investing is your field. So, what drove you to this industry? What were your expectations when you started? And if you do a flashback, how do you frame your best experiences?
Well, thank you so much for inviting me to join you today. It's really a privilege. So I appreciate that, especially hearing this is your second podcast. So that's fantastic. Um, the answer, I could go in so many different directions with that, but I'm actually going to go way back, like way back. I grew up outside of New York City, and I was exposed to a lot of different things at early ages. Everything from having my Barbie dolls and baby dolls to my
Mhm.
bicycle and my friends and playgrounds, but also to very diverse cultures because of sort of the social activities that my family had in New York City and really in the boroughs of New York City, not sort of midtown Manhattan with all the glamorous streets, but really the real streets. And driving around, to get to those activities, I used to see things like housing developments where there were tons of kids outside just standing around against like chain linked fences. And I would see burnt out buildings and I would see graffiti everywhere. And I was the type of kid, and still am, I suppose, that I asked why. Like, what are they doing? Why are they standing there? Why is that house burned, and they haven't rebuilt it? Why aren't the kids in school? Like, if my parents had taken me out for the day to go do an activity. And so that translated into I became involved with Model UN when I was in high school for 4 years, and it translated in a lot of different ways. But equally, I also had grandparents who every night when I would stay with them, they had their noses in the newspaper and they had, tiny, tiny little print. And I used to ask them, like, what are you reading? What is that? Like there were no cartoons, there were no pictures, and they started to explain to me that it was stock prices. And they started to explain the stock market to me. I mean, I was probably 7 years old, 8 years old. And that led them to give me, I remember it was a book called The Children's Guide of Wall Street. And also, there was a children's version of Monopoly at that time. And then they upgraded me to the regular version of Monopoly. But I really became obsessed with these things. And so it real juxtaposition, right? Like this lens that I look through society at from a very young age onward, like noticing that things were different and didn't categorize it like a social injustice, but just like things are different. How do they live? And then, this connection to money fueling, investment. And so my first job after college was I worked for a large pension fund manager where I thought, I wanted to be a portfolio manager, managing money. And one of my first tasks I was asked to assume, this was in the late 80s, was to be sort of the socially responsible assistant portfolio manager, to use the Sullivan Principles book to take things out of portfolios that certain pension plans were opposed to because of apartheid in South Africa. And so I really thought, wow, this is an opportunity for me to marry these two, passions. And my expectations to your question was that, I thought that this was going to be my full-time job within a year or two. Only that didn't happen. What did happen was, Nelson Mandela, fortunately, was finally freed. He became president. And the conversation for investors really shifted to the environment. And this was after a number of environmental disasters. And then certainly the debate, quote unquote, around climate change had begun, going into the early 90s. And so, how I've seen the industry evolve is from like a theme-driven dialogue, some would say values-driven, to one now that it's really investment-driven, but focused on themes and problems, trying to solve for some of the world's greatest challenges, as well as challenges that investors are facing, in their own, communities.
At the end of the day, Nuveen and yourself, you are institutional investors. Can you help me understand why do you invest and who are your stakeholders? Who do you serve?
Yeah, so we invest, to basically make, an impact on the world that we serve, but in short, we're also working with investors who can be anything from a participant in a university retirement system. So somebody who's worked in academia or is it working in academia, like a professor. Or we also serve pension plans, some of the largest pension plans in the United States or in the world, as well as kind of everything in between, what I call regular investors who might come in through a financial advisor, or who might invest with us directly because they've come across our investment funds. So a very wide range of stakeholders. So I view that, through the lens of they come to us because first and foremost, I think they recognize the skill set that we bring to the table. So as you mentioned earlier, when it comes to responsible investing, and we've been doing this for a very long time. We have over 50 years of a history there. Our first investment product came out in 1990. We have a large team dedicated to the area, et cetera, et cetera. So I think it demonstrates the commitment that the firm has.
That's very interesting as well to understand the different timelines that you might envision as serving those stakeholders. In some way, I'm curious to understand, is the mandate mainly serving current generations, or is this, well, there is some sort of purpose about serving future generations? I always wonder, institutions like yours, do you see stakeholders or even the child that has not yet born? What's your thinking about that?
Yeah, I love that question, Albert. The reality, I would argue from any investment perspective, but especially from a responsible investing lens, and think about, the dialogue around climate right now, especially, right? We were speaking earlier about, some of the results that are coming out with some research, but you cannot invest with a very short time frame, I believe, in today's day and age. Recognizing that the world is greater than we are, right? Our investments have lasting impact on not simply somebody's investment portfolio and the financial results, but every single investment has some type of impact. It could be positive or it could be negative. And that lasting impact, again, far expands upon, or exceeds, the financial result in a fixed period of time. That impact has a lasting potential. And that is where your future generations certainly come into play. Assessment.
Thank you, Megan. Another thing that I'm struggling is there is a confusion around what I call the doing well by doing good. there is a soup of words that I'm not sure is helping. In the comments of the podcast, you will find a link of a Google Trends analysis of different words like ESG, impact investing, sustainable development goals, and corporate social responsibility. I'll spare the audience going through deep definitions now, but I found interesting to see how, for example, CSR, so corporate social responsibility, has been the number one Googled word for years until more recently we saw ESG, so environment, social governance, increase popularity in the US. But impact investing search as a word has been more the popular keyword for the rest of the world. What's your take of that? And if you could rename these concepts, how would you?
Yeah, I mean, you're hitting on, I would say that it's no longer the elephant in the room because we're talking about it, right? But it's just so enormous that it diverts the attention from what we're really talking about. We at Nuveen use the term responsible investing. And what we mean by that is really a collection of all the activities of investment related activities that leverage environmental, social, and governance factors and positive impact to add value to our client portfolios across all of our asset classes that you so nicely detailed earlier. And then within that, we hold out what we call our three core principles, which is taking those ESG factors and embedding it across the investment process. So we call that ESG integration. And then engagement, which is what do we do with the companies once we invest in them? How are we engaging with management to really think through positive impact through an environmental, social, and governance lens? And then impact from the perspective, how are we measuring, managing, and reporting out on the impact of those investments? So again, we call it responsible investing, but even within that description, I used ESG, I used impact, right? So, I mean, we also have a sustainability area, for example, within our private real estate group. Other firms, as you mentioned, use sustainable finance. They might use impact investing as the catch-all phrase, ESG investing, and there's so many more. So there's no, rhyme and reason why we use one term versus others. I think all of us have equal intentions that we mean the same thing in some respects. But I think it concludes to one thing. One, we need a better taxonomy on a global basis, and we need to hold firm to that decision, whatever that decision might be. So the other part of your question, how would I rename it? I'm a simple person at the end of the day. So I believe in simplification, and I would simply call it investing. And the reason why is because ESG is embedded in the investment process. Why call it out as anything other than investing when it is part of the investment process? The focus is on the investment process, not necessarily the ingredients that you put into, making your three-course dinner. It's really what is the outcome? Your outcome is the investment portfolio and your ability to manage that portfolio. The tools and the lenses and the factors that you might be assessing certainly could include ESG, and in our case, they absolutely do. But I would just call it investing.
I love it. I take it. So what are the main challenges you see today in investing? What aspirations should the industry have? And what have been the results so far in your view on those investing with these responsible lenses?
Yeah, well, I think you definitely hit on the first challenge, right? Lots of terminology, right? So I think we talked about that. I would also say, there's a lot of discussion around greenwashing. Are investment firms that are holding out ESG really delivering what they say they're doing? Or is it just terminology that they're using because they recognize the interest by investors? There's also evolving regulations by region. So whether you're here in the United States or in Europe or in Asia, there's different regulation affecting the investment management within those regions. But there is what I call the spillover effect, where we're all observing and learning from what is taking place and trying to evolve and adapt as a result. Fourth challenge would be data. Really reliable, timely, consistent, complete data sets. So depending on asset class, that is still really a work in progress. And I think given the nature of our world and our business, I don't expect that challenge to ever be, check, checked off the box.
Yeah,
I think it will continue to evolve as technology evolves, as regulation around data, certain types of data, for example, diversity, information by country, as that evolves, that type of content will evolve as well. So,
yeah. I mean, the garbage in, garbage out, it's a problem that can be amplified when you are tackling big problems like the ones that many of these responsible investment strategies want to address. Any specific results that you think that the industry can present as a success? I have always been curious, and there has been a lot of debate about linking performance of assets that have a specific corporate purpose. Is that could be one of the results that the industry can be more proud of?
Mm-hmm. Yeah, I mean, I think first and foremost, the fact that we're even having this conversation is incredible. I mean, 2 years ago, the focus on ESG and the focus on, what should we call it, was really less so, right?
Okay.
And now, we've seen companies really look at ESG and how it's being integrated into their company across all lines of the company. Maybe 5 years ago, maybe even in some cases 3 years ago, maybe even shorter for some companies, ESG was usually a junior person on the investor relations team who was tagged to kind of get some metrics, and then on, the quarterly call, they would spill it out to appease a certain percentage of shareholders. But now, from the CEO down, they understand how critical it is to the profitability of that company. That is the critical part. So from a success perspective, I think the recognition that ESG can ultimately contribute to the bottom line, and it does, is a huge, huge, success.
The problem of climate change. Left unchecked, global warming threatens to destabilize the climate. And a United Nations-sponsored climate change report, was just released Monday, estimated that the Earth will heat up by more than 1.5 degrees Celsius by 2030, a time threshold much sooner than expected. This equates to many more droughts, floods, and fires in the coming years, a scientific byproduct of global warming. I believe radical innovation cannot thrive unless we focus in solving big problems while operating in a free market where, one, companies operate with purpose, allowing the company to focus on the long term. And I think that institutional investors like you are critical in helping this short-term versus long-term balance. Second, demonstrable strong economic case for cooperating. Customers, employees, suppliers, and investors can all vote with their feet. If something is not contributing to the bigger good, just vote with your feet. And the third one, it's maybe monitoring behavior and letting the market sanction those who cheat. So Megan, to conclude, what's your take on this, and what ingredient in the formula am I missing?
It also reminds me of an Einstein quote where Einstein said, "We cannot solve our problems with the same thinking we used when we created them." That is very powerful.
I think that I will take it's the mindset that you have just expressed using Einstein's quote. I think that the mindset is one of the key drivers, and I think that that's what I was missing in the formula. So let's really have this optimistic mindset that would allow us to change the things that do not work. And I really appreciate, Megan, your conversation on how to make this happen. Thank you very much.
Thank you very much. It was a pleasure.